What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
If you're listening to this episode, you're already ahead of the curve. We had Jerry O'Shea, head of global insights at Hashdex, on to discuss institutional adoption, the success of Bitcoin ETFs, evolving U.S. policy, and more. From $70 billion amassed in IBIT to Connecticut banning state investment in Bitcoin to a stablecoin bill on the horizon and the fallout between Trump and Musk, 2025 has been anything but quiet. And actually, we just wrapped up the first full month of Bitcoin holding above 100K. But with rising adoption and higher prices comes new challenges. Physical challenges, digital challenges, inheritance, custody. This is why we built OnRamp, for investors who take Bitcoin seriously. Securing your share of 21 million requires a robust solution designed to mitigate evolving threats, with inheritance and insurance built in. Whether you're looking for institutional-grade custody, seamless inheritance planning, or access to trusted financial services, OnRamp helps you protect and grow your Bitcoin for the long term. You can sign up in minutes on our website here using code TLT for $150 off your first month of OnRamp Standard, or you can book a consultation with me or the team to see if OnRamp is right for you. Hope you enjoyed the episode. And we are live. It's the last trade. We're recording today with my co-hosts Brian and Michael from OnRamp, and we have an honorable guest, Jerry O'Shea, joining us as the head of global market insights at Hashdex Asset Management. And Jerry, there is a lot of global market insights for us to discuss. 2025 has just been an insanely bullish year for Bitcoin, but not only the price, there's a lot of things that are actually happening behind the scenes. And I'm sure we'll touch on it quite a bit as well, because you have a policy background as well. You were at Fidelity Investments for some time, specifically working on policy, and now is a particularly interesting time for Bitcoin as it relates to policy, because it's really the first administration that we have seen with the Trump administration that is favorable toward Bitcoin as a form of money, as an investable asset. And we're starting to see a lot of momentum on policy and the regulatory front. So excited to discuss what's happening there. But before we get into that, we always like to start the show just to acknowledge where we are with the price of Bitcoin. All four of us are certainly longer term investors here, but it's good just to get a little bit of a sentiment check, pulse check. We're trading at about 110,000, just shy of it at 109.6. We are hovering around all-time highs, but it does feel like a very quiet time for Bitcoin. Any initial thoughts before we jump into some of the first charts? Brian, maybe I'll throw it over to you. Just any thoughts on the price?
Yeah, very quiet 109K. It's been pretty astounding the past 48 hours to just observe this range between 108 and 110. And it feels like to me it wants to break out to the upside. And as you were referencing, all of the bullish tailwinds, all of the narratives, that we've observed over the past several months really don't feel like they're baked into the price just yet. In my mind, so much good has happened, so much positive news flow has occurred, that it feels like we should be much higher than this. So it does feel like the chart wants to break out a bit. So yeah, kind of a surreal moment to be sort of just oscillating in a tight range right around all-time highs.
Absolutely. Yeah. Jerry, any thoughts from you? We're going to pull up the chart here in a second, but you've been involved in this space personally for a long time and professionally now as well. Just what do you make of where we're at currently in the cycle? Just thoughts on the price. Feels like we have a lot of upside ahead of us here, but curious what you're seeing at Hashdex and just conversations with institutional investors, how those things are going.
Necessarily was bought into the kind of 100K psychological, being such an important psychological level. I feel like now with it being at that level over a month or so at this point, it feels pretty good, and it's definitely affecting my psychology. So I think, it's nice in some ways to have a little bit less volatility. I think, we're certainly, as Brian was mentioning, with some of the tailwinds going on right now, we're anticipating some more upside volatility for sure. But right now, where we're at, this sort of, hovering around 110 or so, 109, 108, I'm okay with that. It feels about right. I think there's, speculation about who's selling, right? Whales are selling, but then you have the ETFs stepping in. You have some of these treasury companies. I know we'll get into that discussion a little bit more later, buying as well. So it feels kind of balanced to me right now, with better potential to break to the upside from my perspective.
Yeah, to Brian's point, and to kind of support to the upside, the chart I'm pulling up is the total monthly inflows for the past roughly, I want to say, looks like roughly 12 months. And basically, the USA has seen plus 60 billion in cumulative flows into crypto ETPs, ETFs, while the rest of the world has been negative 1.7 billion. And why I think that's kind of a important stat for the upside is, like, we see the US leading, we see the administration, we see the policy enacted, we see what's happening with MicroStrategy, and now there's no shortage of not only companies adding Bitcoin. I think IRM just came out offering a $450 million convertible note, but then the public markets with Gemini, I think, set to IPO, Bullish. There's no shortage of, like, access to liquidity in the US markets. And I think that's the leading indicator. And then the bet is that the rest of the world is slowly waking up. And if that's true, then that's obviously positive for the price. The last part to call out is it came out, I think, yesterday about when GameStop was buying BTC, like in the total amounts and however it got reported. And I think that's an important distinction, because it's not like net new Bitcoin, but that's what's supported this price lift. And we can expect there's a lot more Bitcoin being accumulated across different treasuries and ETFs in the US and abroad. So it's a very bullish setup,
That's
but maybe
always dangerous.
because of that, we're set for to go down. Because if we're all bullish, then we're probably wrong.
No, we already did that. I already opened up the chart for 2 months and looked at 80K, so I think we have that behind us. Not to say there won't be other corrections during this cycle. That's just part of how these Bitcoin and crypto cycles go. But I think we've already kind of gotten through the near-term correction, and certainly more upside on the horizon. It's also worth calling out, there hasn't been a lot of data to support this, because Bitcoin's only been above 100K for, I guess, the first time about 6 months ago. But we actually just had the first full month of price above 100K. And actually, a week ago, we got pretty close to cratering below 100K, but the resistance held there. And so, first ever month, 30 trading days of Bitcoin being above 100K. I feel like that's a pretty big milestone. And Jerry, one thing that you mentioned too, important to call out, especially because in traditional finance, we associate volatility to be a bad thing, but you mentioned upside volatility. Bitcoin and gold, we're going to talk about gold here in a second, both have more upside volatility than downside volatility. And so typically in traditional finance, people associate volatility to be bad because equities, fixed income, traditional assets in the 60-40 portfolio tend to have more negative skew. They have more bad days than they have good days in terms of volatility. But Bitcoin is actually incredibly unique. And it's also really hard to time the market in Bitcoin, which is why, we're kind of set it and forget it type investors here. It's more of a strategic asset allocation, because Bitcoin does have days or weeks where it just explodes higher. And if you're out of the market because you're trying to time it, you're going to miss that upside volatility. So one thing I did want to call out here, I think the group will have a lot of interesting takes, is we saw a chart here from Eric Balkunis, I believe at Bloomberg, right? And so he threw a chart up about IBIT, which is BlackRock's ETF, the largest ETF, surpassing 70 billion in assets under management, the fastest ETF to ever hit that mark in less than a year, 341 days to be specific, which is 5 times faster than the old record held by GLD, which is a gold ETF. And so that was about 1,700 days. I think this is remarkable. People have talked about flows, but just the pace at which we've seen these inflows come, and to Michael's point, specifically in the United States, is absolutely crazy. And if you just take a look from a historical perspective, this chart's a little bit harder to see, but this is a chart of the gold price, and it has here, this arrow points to November 4th, 2004, when GLD launched. And really that allowed for more investors to participate in gold as an asset class beyond just holding the asset directly. And so you can see here when GLD launched, it was called about $400 or so per ounce. And then in the ensuing years, called 5 or 6 years, we saw it top off close to $2,000 an ounce. And so, of course, it's not the perfect parallel, but it's just an incredible signpost. It's something worth calling out because other products need to exist for investors, both institutional and retail, to participate in Bitcoin. And we've only just seen a little over 1 year of data that's actually incredibly bullish. We have $70 billion of inflows into one ETF product and about double that, $130, $140 billion into the ETF complex as a whole. So what do you guys make of just the fact that, what has happened in this historical parallel with gold? What do we kind of think that means for Bitcoin going forward?
Yeah, I think it's I was just gonna say it's indicative of, I think, just a new paradigm. Like the market structure has fundamentally changed, and so when you think about, this notion of who's selling, like there are long-term Bitcoin holders who have an extremely low cost basis who are selling into this level, but there's just this new consistent bid from these ETF products, from corporate balance sheets, from sovereigns, probably more covertly, that is sort of outweighing that sell pressure from long-term holders. And so it's sort of makes sense that we're grinding sort of sideways to up over the past month or so. And so I think it's just it is a natural parallel to look at when that market structure for gold changed. You saw, I think that showed like basically a 7-year bull market for gold after those products were created. And I think we might see something similar with Bitcoin. I'm not saying like cycles are totally dead, but I do think the market structure is now just fundamentally different, where if there is some sort of material sell-off, I just think there's new bidders, there's new market structure, and there's new market participants that are ready and waiting for any dip to add to their allocation or get off zero for a lot of these folks in these pools of capital. So I just think we're in a totally new paradigm now, where I think the volatility is down. So like if to Jerry's earlier point, like Bitcoin's volatility has sort of compressed down to like similar to some Mag 7 stocks. So it's less volatile. To your point, Jackson, it's still positively skewed. And so I would kind of expect this sideways / upward grind just going forward, just given the new structural bidders in this market.
Yeah, I mean, I support all that. I think like it's super bullish for the opportunity and access to BTC that historically hadn't been there. I can't help but say, when I look at those charts, I can't feel like it's very bullish for on-ramp and just multi-institution in general. And the reason why is because the parallel starts to break down when gold is super hard to take delivery and have exposure and access it. And there's a reason why the ETFs, because gold was accessible pre-ETF, but it had a similar, point in the culture and society. If you're going to take delivery, have it integrated in a financial system, it wasn't really available. And so the ETFs provided this exposure. And anybody that, has large positions in GLD or gold, most sovereigns are going to take delivery of that. They're going to want it, especially in the world we're going to with volatility. Well, Bitcoin's looked in that same fashion. It's hard to hold, it's hard to deliver, it's hard to think about counterparty risk. So you're offsetting that to the BlackRocks of the world and then the underlying custodians. But we all know, anybody holding a material position, that there's better ways, and it just takes time and the price appreciation to learn more about the underlying. And similar with multi-institution, and it won't just be us, but you can click a button and get access to the underlying without, better tax availability when it comes to movement of the assets, lending against them, doing other things native to that. When the market wakes up to that, it's like, well, why would you hold 3 levels of, counterparty risk and execution risk that lives? And that's kind of where the sentiment has always been around the treasury companies. It's like, once the market wakes up, that you don't need exposure via this ticker or, ETF, I think will stand for a very long time just because it's a known quantity and it at least gives the closest to direct spot exposure. So I think that's where the analogy kind of breaks down, is that this asset is much easier to purchase and take delivery of, but in the market sentiment, it still resembles gold in the previous corollary, where like you couldn't actually do anything other than the ETF product.
Jerry, would love your thoughts on this as well, just because I know you've been at Hashdex for several years now. You were there pre and now post ETF. And so curious what you make of the fact that we have, for the past 18 months or so, ETFs trading in the US. We've had the most successful ETF launches in recorded history. And so I'd love to see, kind of boots on the ground, what you've seen there in terms of institutional appetite, how investors are thinking about allocating to Bitcoin. Are they looking mostly at ETF products, financial products to get exposure? Are they looking for more direct investment as well? But yeah, I would love to hear just kind of your thoughts, your journey, how things have evolved over the past several years, and what you make of the big milestones of today.
Absolutely. And I think, like, to your point, one of the big one of the most important things I think about seeing the steady flows into the Bitcoin ETFs is it really does act as kind of marketing for Bitcoin, right? In that, when GLD launched, everyone knew what gold was, right? You didn't really have to explain that to them. But with these steady flows coming into Bitcoin, it's opening up a lot of conversations with people, right? If they have exposure, maybe they're thinking about getting it in a different way. But I do think that, we had predicted kind of the end of the year that we'd see as many net new flows into the ETFs at the end of this year, 2025. And to be quite honest, at the time, it felt like a little bit of a bold prediction, but we're totally seeing that. We haven't seen the demand really slow down. And so I think it's a really strong sign that there is this demand out there that I think will carry over to institutions. Like whether or not the ETF is the right vehicle for them or not, that's yet to be determined. But I do think it's opening up a lot of conversations. And at Hashdex, so I don't know how familiar folks are with our background, but we have Latin American roots. We are headquartered in Brazil. And that was a country that very early on adopted Bitcoin, both at the individual level, but also the government and financial regulators in particular. And so, what we saw down there, and, when I joined in 2021, it was not that long after our Bitcoin ETF had started to trade and other ETFs as well. And one of the things that the financial regulators did very early on was realize that, look, we need to treat this asset as any other financial asset and give investors that type of access. And so I often say to people, it feels like to me, Brazil being a country that's had, I think maybe 5 or so different currencies in the last 40 years, a digital currency like this is not as crazy an idea as it might be to someone in the US who's had access to the dollar their whole life. So they've been very early adopters of this technology. And I like to say, it's kind of like what's happening down there is sort of 2 years ahead of what's happening in the US. And what we've seen is that it went from retail to intermediaries, wealth managers, financial advisors. And now a lot of the conversations are really around institutional access, right, to this asset class. And, I think we will see that obviously in the US. We're seeing signs of it already. It will take some time. I don't think this is something that's going to happen in a matter of months. There certainly will be milestones, I think, and catalysts that will help kind of accelerate the institutional adoption of this asset class. That will continue. But ultimately, I think, it's a long due diligence process for a lot of these institutions. And maybe it's helpful too, because I think a lot of times when people talk about institutional investors, they don't really define what they're talking about. And there is some kind of blurring of the lines, so to speak. So you obviously have retail, individual investors, and then financial intermediaries like RIAs, financial advisors, wealth managers. Sometimes those are considered institutional investors because they work for large institutions, they're big pools of capital. But what I'm talking about are really like the large pension plans, endowments, foundations, sovereigns. Those folks that typically have a very long due diligence process in terms of understanding an asset and getting exposure to it are the folks that are really kind of like the third leg of this investor access stool. That I think, once that is kind of cemented, and again, we've seen signs like this. We've seen the state of Wisconsin Investment Board get access to Bitcoin ETFs, state of Michigan, and some other municipalities as well. So we're seeing signs in that direction, but it is something that will take some time. And the reason I think it's so important, like using for instance, using the state of Wisconsin as an example, right? That's a retirement system that has somewhere like 700,000 people within that system. So because they have exposure to Bitcoin ETFs right now, that's 700,000 people that have exposure to Bitcoin, right, within their retirement accounts. And which is actually, that's like the size of Boston, right? So if someone told you, hey, everyone in the city of Boston is going to have exposure to Bitcoin at some point, it might sound like a big thing. But the big deal with these big pension plans, right, is they're giving all these individuals exposure to this asset class. So not only giving them the opportunity to learn about it themselves, but also giving them this, what we all think is such an important store of value, potentially digital gold type asset that they'll have in their portfolios over the long term.
I love that as well. And yeah, I mean, it'll be a catalyst, to your point, Jerry, for just further education in the space too, right? Because you could imagine if you are relying on a pension from your state retirement plan, and Bitcoin starts as a very small percentage of that plan, but grows over time. Let's say even discounting the fact of further allocations from the pension, but just from long-term growth of the asset, it might start to cause people to think a little bit more critically about what they actually own and encourage them to look maybe more deeply into Bitcoin at an individual basis as well, beyond the allocation they have through their pension plan. So I think that's incredibly exciting. There are, of course, people in the space who think that Bitcoin needs to be this. They have this very pure ideological stance of what Bitcoin is. They don't want any states or governments or pension plans or institutional investors to be involved. But that's not the point of Bitcoin, right? It is for everyone to adopt. And I think ultimately it's a great sign to see, just even if it's a little bit, just trickling in, dipping the toe in the water in terms of an allocation. It was only a few basis points, I would say, with SWIB last year. But that's a starting point, and they're one of the most respected and one of the largest state pension plans in the country. So I'm curious to get your thoughts, also the group's thoughts too, just like Jerry, you mentioned, it's a long process. It's a long process from the buying perspective for institutional allocators to do due diligence. It's also a longer process from a policy standpoint, but we're starting to see policy be more of a focal point of the administration. You have groups like the Bitcoin Policy Institute that are doing great work to really further the mission of Bitcoin within the United States. So I'm curious, like, what you are paying attention to in terms of catalysts to further unlock institutional adoption. Is it more so on the policy side? Is it market structure? Is there just need to be more capital allocated to the space first? Does it need to be a bigger asset? I would love to get your thoughts on this because it's ultimately, what a lot of people are paying attention to in terms of broadening exposure and adoption of Bitcoin is the institutions.
Yeah, absolutely. And I think all the things you mentioned are certainly part of that. The one thing that I think with these big institutional investors that maybe people don't talk often enough about is just time, right? Like they don't want to invest in an asset that doesn't have some sort of like track record. And I think, Bitcoin is certainly getting there. I kind of look at the, evidence, for instance, over the last 5 years that Bitcoin can act as digital gold, right? If you look at how it performed in the wake of COVID, if you look at how it performed after Russia invaded Ukraine, after the bank crisis in 2023, and even more recently, like with the tariffs, decoupling from equities and other risk assets for a time. So I think, that's, call it 5 years of evidence that this is an asset that can perform differently within portfolios. And that's going to be very important to these institutional investors, right? They don't want to just put something in there that is one, untested, hasn't been through market cycles, and two, doesn't do anything in terms of benefits to the overall diversification of their particular plans.
One thing to call out, this is going to be a little bearish, but it's the reality is I think we naturally assume these investors are long-term oriented and they're looking at the asset as a buy and hold, and that's just not the case. Because I think they will get there in the same way we talk about, custody and how people will get to realizing it. But the reality is institutions are made up of individuals and they all come down the journey in a similar fashion. And so I don't know if we're all aware, like SWIB fully divested from their ETF position because they probably realized some, gain and they hit whatever mandate. And then we saw in 21 during the run up where there was, I forget what fund in the UK that kind of like, doubled their investment and kind of divested. So the point being is, I think there's a common sentiment that we're going to reduce all this volatility in the next run up, and maybe pubcos and based on their mandate and vibes that they're selling that they're never going to sell. But there's a reality that institutional investors and similar as individuals, they naturally have certain time preferences and they may not be all long-term oriented to start because that's naturally how they think about trades. So it's just worth calling out. I don't know if Jerry, if that supports how you think about it.
It's a good point too, right? Because these, the investment management agreements that these, with these public pensions in particular, right? They set an allocation to a particular asset, and when the allocation grows beyond that, they have to trim it back. And with Bitcoin, that may have the impact as more of these types of institutions get involved in helping kind of tamp down volatility over time. But you're right, it's an interesting position for them to be in, because I think any of us that know, if we personally were to only take a 2% allocation in Bitcoin for our overall portfolios, we would not, like, if it went up to 4%, go, oh my gosh, I need to trim this back. I'm getting too much, exposure. And with the growth that it's experienced, I think that's going to be something that these institutions will have to grapple with. I do think, the BlackRock recommendation in their model portfolios at 2%. I think that's a big deal and everything. I tend to be, and maybe this is overly bullish. I'd love your guys' thoughts on this, but I think in a lot of ways it's kind of like at 1-2% allocation, why bother with something if you really understand kind of the power of having a Bitcoin allocation in your portfolio. So, I actually think that these kind of target allocations for these model portfolios in particular are going to increase over time. I don't know exactly, when that might be. It's certainly going to take a lot of folks some time to kind of dip their toe in the water, but it just seems very conservative to me right now. And it's certainly, for these, again, getting back to like the institutional investors, there's only a handful of them that have even dipped their toes in the water, and they tend to be very slow to move anyways, right? Like a lot of these types of plans, just got emerging markets exposure, say 20, 25 years ago or so, right? They're just very slow to move into new asset classes. So that's a dynamic as well. But I do think that the allocation kind of recommendations we're going to start to see those tick more upwards, especially if we see, these periods and have more kind of evidence of the volatility not being as wild as it used to be, and maybe people being able to make the case that over time this is going to improve Sharpe ratios, right? And you can do that with a larger than 1% allocation.
Yeah,
Yeah. The best
to me, it's a broader signal of a lot of these pools of capital, particularly on the endowment, foundation, pension side, that at least for the foreseeable future, in my mind, are going to continue to sort of cling to the vestiges of what they've known for several decades. And what I mean by that is not fully giving up on the 60-40 and not giving up on diversification and rebalancing, all of these tropes that they've become accustomed to over the past several decades. And even if they get to the point of a 25 basis point allocation to Bitcoin, like they're not doing that because they see or that they necessarily appreciate like this shift towards hard money away from inside money, this shift towards the 60-40 being replaced by maybe the 40% is not bonds, it's some combination of gold and Bitcoin. Like they're not that far down their journey yet. They're still very early innings in understanding sort of the medium to long term trajectory here. So I think it's a great point that like they're going to cling to these old methodologies of like, oh, it's doubled. Well, we better cut that back to our initial target. It's like, well, if you're actually thinking deeply about the long-term investment thesis here, like one, you would expect it to double over a relatively short time frame, and two, like this goes back to like some of Warren Buffettisms and like value investing of like you don't you add to your winners, you don't trim your winners and add to your losers, and that's precisely what they'd be doing if they're trimming their their Bitcoin exposure and then redistributing that capital to fixed income or equities. And so I think there's just a lot of ingrained practices, particularly with these pools of capital, that just needs to be relearned and retrained. And frankly, a lot of that has just kind of come from sort of the generational shift of decision makers over time, and that's going to be a multi-decade process.
Yeah, I think that's right. I think it's what we've like talked about, and maybe Larry Fink and BlackRock will have the biggest impact is framing Bitcoin's just a new asset class, because historically people haven't known what bucket to put it in, and so it's really hard to think through a 60-40 and then how do you have a long-term view to express on Bitcoin. The heuristic that I like, it's not apples to apples with institutions, but it's close enough, and this is definitely not financial advice, but it's like, well, because everyone's probably got this, how much Bitcoin should I buy? And this wasn't my idea, it was somebody I know, but it's like referencing you want to buy enough where if the price doubles, you don't sell it, but if it cuts in half, you don't sell it, right? Like you have enough exposure where you're not uncomfortable in either direction. It's like a pretty good starting point to start thinking about the asset class and not be prepared to trade it. Probably some of these institutions will be well served by thinking about it in that way as well, versus it's a trade, because a lot of these people are going to be knocking themselves when it's 250K. They sold because they had 100% gain.
Totally agree.
Yeah.
Love to shift the conversation to states and the federal level in the U.S., but also maybe just more broadly sovereigns. One thing we flagged to discuss this week was a piece of news that just came out yesterday with Connecticut passing a law to ban a state investment in Bitcoin. So this is interesting because I don't know how exactly this is measured, but Bill Miller here says that Connecticut ranks 48 out of 50 states in terms of fiscal stability for 2025, according to U.S. News. So, not a great spot to be in, or pretty close to last place in terms of fiscal stability for states, and then choosing to ban state investment in Bitcoin, which the four of us in our audience would agree is probably not the best idea in terms of being a forward-thinking state, in terms of being a fiscally responsible state. So, curious to hear some initial reactions here, because on the flip side, there is positive stuff happening, like Texas is one example, and I believe New Hampshire was the first state to actually pass legislation to allow for state investment in Bitcoin. But then you have a neighboring state, Connecticut, here, banning investment in Bitcoin. Boo.
Yeah, well, I'm here in New England, somewhere between Connecticut and New Hampshire, so kind of sandwiched between those two ends of the spectrum. But I do think it's one of these things where you realize that we live in a highly political world, right? And that policymakers will oftentimes not act in the best interests of their constituents for a variety of reasons. But I think this sort of visceral reaction to Bitcoin, if I had to guess, I mean, and maybe I think it's a pretty educated guess, but like a lot of this, I think, is just in response to the embrace of the administration by this asset, and people that don't understand it think this is somehow not apolitical, right? It's like, and I know it's not a perfect analogy, but like when I see Connecticut do things like that, it's kind of like them, banning the internet or saying like we're not going to allow any public employees to have access to the internet, because we think it's this dangerous new realm that's not worthy of our citizens here. So I think that on one hand that's one side, but also, Jackson, you mentioned like the fiscal situation there, which is kind of crazy to me. That on one hand you have federal lawmakers, policymakers in the U.S. talking about Bitcoin Reserve and its potential to offset or deal with our uncontrollable debt and our debt burdens, and then you have a state like Connecticut that just doesn't seem to see that being an option at all. I think it's a good thing. One, not what Connecticut's doing specifically, but I think it's good to have states with their different proposals because they can act a lot quicker, right, than the federal government. They don't have each of them does not have their own central bank pushing back on these sorts of ideas. So I think it's good to have, call it, these incubators put into practice, and like we'll see how it plays out over time. New Hampshire, has always been, they were kind of a state that had a lot of very early on Bitcoin adopters. They're kind of known, live free or die is the state motto. They have sort of a very libertarian ethos. So it makes sense that they would pursue something like this, in my opinion. But at the end of the day, I think overwhelmingly Connecticut, and if other states choose to do the same thing, will be in a very small minority, and it'll obviously play out over time, the results of having something like that in place. And I think these states that are choosing to embrace it as a long-term asset, like to improve kind of the overall balance sheet, I think they're going to benefit tremendously.
It's fascinating because this stuff is playing out in real time, and people still continue to do this. Like, without getting political, we're seeing what's happening in California, and like if we all had to make bets, call it post-COVID, but even before then, I would imagine most individuals with this expressing this investment thesis would be long Florida, Tennessee, Texas. A great, again, objective anecdote is we're all long Bitcoin, and you would imagine you're long the energy markets related to it. And Texas sits with, I think the last time I checked, is like 27% of the global hash rate because China decided to push it out. Like, that's just one sector or aspect of Bitcoin that this is just going to play out the way it is. And, we saw the Dallas to New York Stock Exchange moving down there. So yeah, we kind of know where this goes. You can ban yourself from Bitcoin, but you can't, ban Bitcoin from everyone else.
Yeah,
Yeah.
that's well said. Thankfully, the individual citizens of Connecticut can still buy Bitcoin for themselves, and I think you nailed it, Jerry. Like, I think it is a very educated guess as to why this specific case occurred. It's as if in the age of the internet, Trump.com emerged, and they said, we're not going to launch our own website, basically, something to that effect. Like, I think it is pretty clearly they are being, they're shielding themselves from actually understanding the underlying, because they're associating it with this current administration, who they happen to disagree with on a variety of other things that are completely unrelated to the monetary merits of Bitcoin.
Yeah, I completely agree. And I think there was Ray Dalio a couple days ago had a pretty good tweet that I think is kind of based on one of his books from a few years ago that sort of talks about how basically linking the fiscal situation of a government to kind of the quality of life of the people that live in that government. And I think most people keep those things very disconnected, right? And they don't think that, if the US government has 35 trillion in debt, that's their problem, right? And I think he does a really nice job in this particular tweet. And I haven't read the book, but from what I can tell, kind of laying out the arguments that these aren't independent variables, right? Like it matters that there's this debt burden at that level of government. It matters at the state level as well. And I think people are slowly recognizing that this does impact their lives in a lot of different ways. Maybe in some ways that feel intangible, right? Like you can go in and see the cost of groceries, and make the conclusion that there's inflation and that's bad and that sort of thing. But I think just in terms of like that sentiment that something's not working right for them, and everything the terrible that's going on in LA right now, I think is arguably could be tied back to a fiscal situation in the U.S. that's been completely reckless, both at the federal level and with a lot of the individual states, right? And I think in that scenario, and even Dalio, I think Ray Dalio has made this connection. Assets like Bitcoin become very attractive, and I think hopefully over time people will kind of realize that this is not a political asset. Bitcoin doesn't care if you're red or blue or whatever other party you choose to affiliate with. And so I think hopefully the tweet that Dalio had sent out, I think it was a little bit of a clickbaity title. It was like Civil War question mark. So it's like kind of hard not to read that when you see it. But I think the points that he raises are really good and really important. And I think it's something that that I think arguably makes a pretty strong case for Bitcoin as being a way to kind of opt out of this fiscal madness that we're all subject to here in the U.S.
Yeah, and by the way, on-ramp clients get Civil War preparedness advice from Michael Tanguma. So another reason to sign up and work with us. But jokes aside, I mean, yeah, I agree with you, Jerry. Everything is downstream of broken money. And the reason why, in large part, there's so much tension in this country is because the monetary system is so beyond repair. And even Elon Musk, I mean, maybe we should talk about the fallout that happened at the tail end of last week, where Musk and Trump are having a feud over social media. And I just kind of thought it was, I guess I thought it was inevitable. Like, 6 months ago, a year ago, when Doge was brought to the public awareness, and this was going to be an initiative within the government, and they come out swinging, $2 trillion, we're going to slash, we're going to balance the budget, we're going to just repair the fiscal situation for the United States, everything will be okay. I think anyone who's paying attention understands enough to know that you can't just go into the government and fix a situation that is 50 years, 100 years into the making. And so this is beyond repair. The past 50 years, I might have mentioned in the last week episode, it's worth reiterating though, and maybe it's worth reiterating until everyone knows, but 45 out of the past 50 years, the government has run a deficit. So it's not about your red team, it's not about your blue team. These are just structural issues within fiat currency and government and central bank money, and there's really no fixing this. So, you have this fallout last week. Would love to hear the group's thoughts, but ultimately I just thought it was a bunch of nonsense. I mean, Elon Musk, maybe he thought he was just going to go and, go put a brain chip in everyone. They're going to figure out exactly how to move the needle and balance the budget, but that didn't happen. And so here we are, the fallout happened. They only saved 180 billion estimated, and that's not in 1 year, that's over the course of 5 years. And then so you compare that to a 1 year goal of $2 trillion, just an epic failure. Hopefully Elon doesn't find this episode and send some people after me, because I haven't taken Michael's course yet, but yeah, curious to hear the group's thoughts.
I think the main thing is there's a lot of gaslighting, like without calling anything out specifically, just think critically with all this stuff. Like you feel it like incepted. This happened 12, 24 months ago with whatever that movie was about the Civil War, and then you have Dalio with his tweet, and like everyone anecdotally, like we know that there's problems and there is there is like natural friction, but also if you go to any town, it's pretty straightforward. Like people show each other respect. It's not this divisiveness that is portrayed in the media. And the other side of the gaslighting that I think everyone would agree with is like the state of the economy and people's, personal balance sheets. Everyone pretends when you talk to high finance and a lot of the people in our industry, they'll say everything's great and GDP is going up and all this stuff, but it's like empirically not the case for every individual. When you look at, we bring up charts every week looking at homes, the ownership, the not even mortality, but like individuals getting married, having kids. Like there's all these things that like the media will portray versus like what's actually happening. And so I think that's just like a very good like mental model of whatever you see, you're probably seeing it for a reason, and you should just try to peel back second and third layers to think a little more critically across the board.
I think that's a great point, and the one I was going to add kind of an anecdote. So Jackson mentioned my background in policy. After college, I worked for about 5 years on Capitol Hill. I worked for the Senate Banking Committee, then the House Financial Services Committee, and that was after we actually the last but balanced budget we had was the like late '90s Clinton era with the House Budget Committee chairman who was a Republican. They balanced the budget, and I came in and I worked in the Senate, and then I worked for a freshman member of Congress right after that. This would have been 2002, and his first order of business was to create a group that would eliminate waste, fraud, and abuse in the government. And it was at the time, it was him and two other freshman congressmen, and it was kind of this thing where the senior leaders in the Congress, both Republican and Democrat, kind of looked at it like, well, this is cute. We've got these new members of Congress that think they're going to eliminate all this waste, fraud, and abuse. And so I kind of saw firsthand back then how difficult it is to even get rid of like the most egregious types of spending, right? Because the world works off incentives, politicians maybe more so than the normal average person. And most of them don't have an incentive, right, to kill these programs that are potentially benefiting some constituents and voters in their district. So it's a very difficult thing to do. And so I was pretty optimistic, actually, when Elon said he was going to champion this, and thought to myself, well, Elon, if there's anyone that can do it, it would be him, right? Just because of his ability to actually deliver results. And so I was pretty optimistic for a while. And then, of course, as we all kind of saw, the reality set in about the, minuscule discretionary spending versus the mandatory spending programs, and trying to make cuts in those is just, almost impossible. Maybe arguably impossible now if Elon Musk can't do it with the folks in government that he was working with. But, ultimately, I think this all kind of sets up a really good narrative for Bitcoin, right? And I'm not telling you all anything you don't know, but I think when you see like such a monumental failure at that level to really pull back and cut some, a lot of, obviously there were things that were cut that were controversial, but a lot of it is really just waste, right? Like it's a big, huge government, very bureaucratic, and there's a lot of efforts that both parties over the decades have tried to eliminate spending. But when you see it kind of fail like that, you realize that the incentives from these policymakers aren't really necessarily in line with your own incentives, right? Which kind of, Michael, to your point, it makes you kind of think, okay, maybe I need to be doing a little bit more thinking, about myself, my personal situation, what I'm seeing around me, what I'm seeing when I'm going to the grocery store, or hearing, from people trying to buy a house or anything else like that. So as kind of, unfortunate it is that the Doge cuts didn't really come to fruition. I do think maybe it's a little bit of an awakening for folks that this is a real problem that's not going away anytime soon, and to think about kind of your long-term savings, your long-term ability to provide for your family. Like you really need to think outside of the traditional means of whether it's investing, like a 60-40 portfolio, or where you choose to save and what you use as a store of value.
Yeah, I think that's very well said, and to me, I think that's spot on. Of like, if there's any silver lining from all of this, despite sort of the inability of Doge to make meaningful spending cuts, the silver lining is that it brought the inability to stop the train. To quote Lynn Alden, like nothing stops this train of debt, deficits, fiscal spending. It brought the realities of that more to the fore. I mean, Elon Musk has the most Twitter followers on earth, and he is spouting constantly now over the past couple weeks about the inability for anything to change on that front, and how it's like a very dire situation. Now, he won't specifically call out Bitcoin as the solution, but if you go into the replies, that's most people's solution that are seeing him having this sort of realization that even he wasn't able to stop the train in any meaningful way, and I think that will continue to catalyze education about the potential solution of Bitcoin, at least for your personal balance sheet, and to Michael's point, to try to move past the gaslighting of the government. Like, the government's not going to save you. You have to save yourself, and in order to do that, you're going to need to opt out and save in a form of money that they can't control or print.
Jerry, maybe going deeper, I think it makes complete sense. I think going deeper on the policy stuff, you have a unique background that you've worked in policy, deeply understand Bitcoin, work in the industry. What's your take been on kind of the new administration the past like 6 months? The amount of leaning in, I think, has caught everyone by surprise, but then also the influence of, should probably give a shout out to the Bitcoin Policy Institute and the summit that they're hosting, because I think everyone here, majority of people on this panel or this conversation will be there. Just like, how do you see that intertwining, like the state of how fast that's moved, and then the interesting dynamic of Bitcoin and just the incentives and how they're just like integrating into policy in our favor,
Yeah.
really.
Yeah. So also, I agree. Like, the Bitcoin Policy Institute, I think, has done a tremendous job, and one of the reasons why I think they've done such a good job is, they're not a trade association, right, representing a bunch of different companies with commercial interests. And I think, in addition to having some tremendous thought leaders there, I think a lot of congressional staff and regulatory staff and stuff can really rely on them for very high quality research and a objective view for why we think this asset is so important. I was surprised. Like, I didn't think that the Bitcoin Strategic Reserve would come that quickly. I was a little bit more skeptical about it. I think, generally speaking, it's a good thing. I think the challenge now is figuring out how to potentially fund it. I haven't really seen any like great ideas that I think would be easy to do, right? I think in the legislation that Senator Lummis has, potentially repricing gold or something like that could work, or maybe even using other crypto assets that are confiscated to buy Bitcoin. Those are things that could potentially work, but I do think it's going to be difficult to kind of do this in a budget neutral way that is not going to cause a lot of political strife. And that's still very much kind of getting back to the Connecticut activity. I mean, Congress and the Senate in particular, there's still a tremendous amount of very important, very powerful people who, hate this industry and don't want to see it succeed. And with the president going kind of deeper into this space, I think they're going to be digging their heels in more. It sounds like, I think the stablecoin legislation will be approved, and potentially even this week. But even that, was a lot more difficult than I think most observers, certainly crypto Twitter, thought it was going to be, right? Because I think maybe people underestimated the degree to which politics drives policy in DC. And if you have the sitting president, very actively supporting this new emerging asset, like, there's going to be a lot of people that just have this visceral reaction to it and want to push back for the sake of pushing back, and because they think it's some sort of political thing. So for Bitcoin specifically, like, I think it's a little bit different than, say, other crypto assets in that it has regulatory clarity, or at least more on a relative basis relative to other types of crypto assets. So it would certainly benefit from, I know there's new efforts now to put together a market structure bill. And I think Bitcoin, if the folks that are the businesses that are providing the infrastructure for people to, hold Bitcoin, trade it, use wallets, all that stuff, if market structure legislation can give them a much better sense of the rules of the road and help them operate in a more kind of friendly environment, I think that'll be a big deal. But my perspective is that it'll probably be more of a boon to like other assets outside of Bitcoin if market structure legislation is actually approved. And I think that's going to be a much more difficult, complex bill to pass, because it's not as the interests, the stablecoin legislation is very different because it aligns very well with policymakers who are interested in finding new people to buy debt for the U.S., finding new ways for that debt to be purchased, for strengthening the dollar. So there's a lot of, getting back to the world working off incentives, particularly politicians. They have a lot of very strong incentives to see a stablecoin bill pass. I think it just gets much more complex and complicated with market structure legislation. And so that one I think is, I don't know if I'd call it like a 50-50 shot of that happening, at least this year. And but we'll see. I mean, I think the big things to watch for are obviously if there's news around how the strategic reserve could be funded. Obviously, from a price perspective, that could be very a huge tailwind. But in the interim, I think we're going to still see a trickle of these states. I think so. We have New Hampshire, Arizona, Texas. You said, Michael. I think they're close, right, to maybe having a reserve. So it's happening at the state level, and I think that'll continue, and that'll continue to put pressure on Congress to at least consider legislation around this and get it out of the kind of administrative executive order form, which over the long term isn't as sustainable as having it put in legislation.
I'm curious, Jerry, any thoughts on you sort of alluded to this, but the order of operation. So I think Senator Lummis has sort of laid this out as, the Genius Act, stablecoins, that's coming first, then it's market structure, then it's turning to how do we accumulate more Bitcoin. And I agree with you that middle piece is probably the most precarious. There's probably the most debate around what that market structure bill actually looks like. It seems like there's line of sight to getting the stablecoin bill through. In your mind, is the market structure bill a prerequisite to figuring out ways to buy Bitcoin, or do you think that they could just skip that step if it's too contentious?
Yeah, that's a good point. A good question. I think it's certainly possible that if it does become too contentious, that they might say this is not something that is like in anyone's interest to pursue. Like you have you basically have 2 years, right, to legislate before everything starts to focus around the election. So if it doesn't happen right at the end of 2026, it's probably not going to happen anytime soon. And if policymakers make that determination, I could certainly see them maybe refocusing on Bitcoin reserve legislation or other kind of similar initiatives. But the important thing to remember too here is, right, this is political influence, right? And one of the reasons why we saw Trump come out in such support is because the crypto industry broadly, with several folks, several leaders within the Bitcoin community did a tremendous job of making him realize that this is an important issue for 50 plus million Americans that are going to vote on this issue and all that good stuff. So there are the sort of political considerations in all this as well, and that could certainly inform the what ends up being prioritized from a legislative perspective. I think, generally speaking, I think the policymakers want to show that they've done something for this industry, right? So they'll probably get the stablecoin bill, but then the market structure bill is a lot more important to a lot of other different aspects of the industry. So I do think they're going to want to show some progress there. Whether they can get it across the finish line with bipartisan support, I don't know. I'm a little pessimistic on that one.
It's kind of, this is going to be a cynical take, but I'm curious, Jerry, where you see, I think the market structure, I mean, it hasn't been the best, but I think from a Bitcoin lens, it's probably been as accretive or advantageous because Bitcoin's been the only thing deemed a commodity, CFTC. What I look at the market structure bill is who gets to govern the grift, right? Like it's just like who gets to, whether it's stable coins and is it banks, is it yield issued on it, who's the custodian, who's going to issue security tokens, who's going to determine if it's a security or not. When we kind of recognize that, I think we'd all agree on this podcast that Bitcoin is a commodity and most, if not everything else, would be deemed a security because they're central issuer and Howey law and all of that, or Howey test. And so independent of it getting approved or not, I think that there's some notion that there's actually been there's a lot of grift, but it would amplify. And I think it actually gets passed because I think there's enough capital to be made. And that's part of where, personally, I think the next 5 to 10 years are going to be, bullish for Bitcoin. A lot of people are going to lose their shirts because they're going to get, caught chasing shiny objects. curious if you see it that way or if you see it differently, that just because people start to figure out the lines of who's governing what, that's just going to open the door for much more proliferation of, digital assets that
Yeah.
historically haven't really been a recipe for success when it comes to preserving individuals' wealth.
Yeah, so I think to me it kind of comes down to the almost more of like a political decision by the Democrats to decide how much they want to fight the progress that this industry has had with this current administration, right? Especially as we get to the midterm elections, right? And there are a number of very, pro Bitcoin, pro digital assets members of Congress that are Democrats, and their voices I think have been drowned out more recently. But I think if there is kind of a decision made that politically they can't afford uh, to kind of fight this industry. And again, using the internet analogy, like I always just think it's like these are essentially like being, anti-internet politicians or something from the early 90s, right? Or if there was ever such a thing. It's just like the realities of the technology. I'm optimistic that the, leaders within the Democratic Party will kind of realize what that means, both from like what their constituents care about, but then also just from like a political perspective, that this is going to be a losing battle. Like, if you're, again, like the Connecticut example, like that's just something that like you're going to sit here and watch New Hampshire and all these other states benefit from making a strategic allocation to Bitcoin, while you're basically just saying that you don't want your retirees to have any access to this, the best performing asset in the last 10 years. So it's, I think that's what it comes down to, is basically just a political question from the Democrats and how much they want to continue to fight this. I had kind of thought with the election outcome that the, Elizabeth Warren's anti-crypto army was, officially dead, but I do think that there still seems to be some energy behind them wanting to push back against this stuff, and a lot of it's politically charged. So I think it'll come down to political decision, whether or not they want to continue this like through the next election cycle.
At least Trump and Warren can agree to get rid of the debt ceiling.
That's true.
There's some middle ground there, at least.
That is true. It doesn't happen often, but when it does, I guess it's either like this. Well, it is scary actually when you see the two of them agree on something. That's a little bit of a red flag. So without even knowing, what the particular issue might be.
Hey, real quick, hope you're enjoying the episode. If you are, would love to see some likes and comments, subscribes on the episode. Put a lot of time into producing the show each week, preparing for it, scheduling guests, and then, of course, having the conversations as well as editing and getting it out onto platforms like YouTube, Spotify, Apple, etc. So if you could just show a token of appreciation, leave us a like, a comment, really goes a long way, and knows that we're doing something right. And if you have any feedback on how to improve the show, certainly welcome a comment on YouTube, or you could also reach out to me directly on Jackson at onrampbitcoin.com. Would love to hear from some listeners. So yeah, hope you enjoy the rest of the episode and really appreciate you listening. I don't know, Michael or Brian, did you have anything else you wanted to chat on about policy or just anything else related? If not, there is something I wanted to talk about with something that Galaxy shared about just physical attacks in this space. But before transitioning there, I want to make sure we covered our bases.
Yeah, I think maybe curious, Jerry, on your side, the sentiment, how you feel about like stable coins and the, what's happening right now, whether it's the market expressing its view via Circle, but then also I think it came out before this launched. Bank of America is in the works, and it got leaked, 2 or 3 months ago about Fidelity testing out. Like how you see this kind of, from a integration into the traditional financial system. I think last week tech companies, the Uber, Google, I forget who else, Airbnb and one
Apple.
other, just like, yeah, Apple. How do you see that playing out, and positive, negative for just like everything else we've been talking about today?
Yeah, absolutely. So like assuming that the legislation does get approved, I mean, I think it'll be a bit of a horse race, right? Because I don't know how much room there is for like, tens or hundreds of different stable coins. That there might be some valuable use cases there, but generally speaking, I think it's a good thing, right? Especially, working for a firm that's based in the emerging markets where people can now access the US dollar on their phone, right, through a wallet. The emerging markets use case for stablecoins, I think, is important, and the ability for them to have access to the dollar is, I think, something that is absolutely fair. It'll be interesting, like getting back to your point about the lobbying aspect of all this. It'll be interesting where the incentives align for these different firms, whether it's a consortium of, I forget all the banks that were involved, JP Morgan and a few others were talking about doing their own stablecoin. If they can come to some type of agreement on like this, big bank stablecoin, it'll be interesting to see how something like that plays out. A Fidelity or other asset managers are going to take a different perspective, I think, than a lot of the banks. So they may choose to compete with a different type of stablecoin. But at the end of the day, I think it's a huge on ramp to Bitcoin, right? Because I think once these stablecoins become, and I think they already are to an extent, people are starting to become more familiar with it. But once they become kind of a household term, people are immediately going to start kind of asking more about this asset class, broadly. How does this differ from Bitcoin and that type of thing? And so I think it's certainly a positive for the industry. Like, who knows what ends up getting included in that bill and what interests get benefits over the others. But generally speaking, I think it's going to be a very important development for Bitcoin adoption in particular.
Yeah, I tend to agree. I think the notion of Bitcoin and stablecoins will be ubiquitous because the dollar is ubiquitous. It's just a digital version of that with you being online. And specifically I don't even want to call it a use case, but the user behavior of if your checking account is digitized via this interoperable token, this dollar that it can go anywhere. Think about, folks listening probably are very heavily overweighted BTC, and maybe you want to be more in the market in Bitcoin and less dollars, but you naturally need to go spend those dollars. Well, maybe those conversions from your bank account can go from, BTC to stable coins in your checking to pay. Like, it just starts to tighten that connectivity. And there's like 100 different use cases or examples how you can, by that, doing that opens up capital flows or flows into BTC. And the earliest example, which is probably the most predominant, is Tether Bitcoin in the trading pair, and kind of where even Circle's origins came about when it came into settling trades, because you can only wire money from 9 to 5, and if you're going to execute and run a trading shop and FX and all those things. So I think it's really positive for BTC, and then obviously we've talked about it here from just like the longevity of the dollar for demand for treasuries is, I think that's going to be a big part of the whole story here.
Absolutely, and I think like the politicians have really latched onto that and appreciated the fact that this could be an easy way to kind of cover up the mess they created, right? In some ways,
someone needs to buy the debt. Someone's going to have to do it. It's going to be the stable coins. I mean, Tether is already in the top 10. I would say top 5, but I'm not confident. But certainly top 10 largest buyers of U.S. Treasuries, and as traditional financial institutions in the United States get into the stablecoin game, they're just going to be acquiring more treasuries through that, and they're going to be exerting dollar influence throughout the world. And so I don't think the end of the dollar is anywhere close. It's going to likely be extended, and this is really a strategic play. I think this is why it's particularly so frustrating to hear politicians bicker about Bitcoin, is because it might have been Alex Thorne who said it last week, is that the stablecoin bill is not a crypto bill. It's really just a dollar bill. It's best for the American people. You could argue it's a grift, like we're exporting inflation to the rest of the world, but it is better for us. I mean, it's kind of a selfish thing to say, but having a stronger dollar and stronger treasury market by having stablecoins be issued around the world and have buyers for the debt, especially when adversarial nations are divesting of U.S. Treasuries, there just needs to be, kind of a backstop there. And that's ultimately what stablecoins, the role that they'll play. And then, of course, Bitcoin fits very nicely into that as well. The great thing is Bitcoin is available to everyone. So, I mean, for countries that are looking for a way to have, de-risk themselves from dollar debasement, confiscation, seizure of assets, I mean, Bitcoin exists as a better way to do so than gold. And so it'll be interesting just to see how everything plays out. It'll probably take longer than this cycle, but over the, call it, next half decade or so, where things land in terms of sovereign accumulation, because we're still awaiting the audit from the U.S. government, but there are reports that estimate about 200,000 Bitcoin is held by the U.S. government, but then there's a lot of evidence that would show that maybe it's about half of that, give or take. So hopefully we'll see that in the next month or two. It will give us a better sense as well. And Jerry, to an earlier point you made, hopefully more clarity as well from the U.S. government in terms of what their sexy phrase of budget neutral means for accumulation of more Bitcoin. Exactly. But Michael, did you have something?
Two things. Yeah, I think the optimistic take to your point is it kind of goes back to everything's good for Bitcoin. Is if you export the dollar, it naturally helps the US, but it's generally a better currency than where it's getting exported to. And then it gives people access because if they get access to that, then they're one step away from BTC. I think historically, with inflation being sub 5%, you can make the case why you'd want to hold more stable coins if you're subject to volatility of Bitcoin. But as Bitcoin naturally dampens and then inflation heightens, more people are going to make that decision, right? It all just comes down to the economic rationality of the individual. It's like, well, why would I hold more of the thing that goes up to and to the right versus down and buys me less? One thing before transitioning to the report you want to pull up is you pulled up something before the call about it's a little bit unrelated but still like pretty big is the Sailor tweet about if they close what was it like if Bitcoin closes at 119,000.
Yeah, so I can pull it up here. It's if Bitcoin closes at 119K for the end of Q2, Strategy will post the largest quarterly earnings in human history, as far as we know. I mean, maybe a long time ago there was bigger quarterly earnings, but this is pretty crazy. Outside of any opinions, good or bad, on the Bitcoin Treasury fiasco, I mean, Strategy is certainly the front runner here. Sailor has done a lot of good things for the space, and so this is a really, I mean, aside from the extremely retail branding of this tweet here, it's an interesting data point. I mean, I don't know what you guys think about this, but I caught it right before we hit record.
It is a wild stat, and seems pretty damn feasible with the way the price is headed right now. And I think it's also just it makes it easier to understand why the Bitcoin Treasury company trade is quickly becoming overcrowded and saturated, because people that are paying attention to what Sailor's been doing for the past few years have seen the writing on the wall of like, this was inevitable. Like, it was inevitable that they would, once the gap accounting was fixed, that any sort of material up move in Bitcoin, given their massive balance sheet of BTC, that like this stat would be inevitable. And so I think for the folks that are paying attention and have sort of latched onto this strategy, like it just speaks to why you've seen so many copycats trying to do the exact same thing.
Yeah, and to use his analogy to fire, right, with these treasury companies, it's like, you can obviously use fire to heat your house or send a rocket into space, but you can also, fire can burn your house or the neighborhood down, right? So it kind of, the devil's in the details with these treasury companies, and there's a big difference between a solid business deciding that they want to strengthen their balance sheet over the long term versus someone trying to, think that they're going to be Michael Saylor 2.0 and have the capacity to, carry out a lot of these much more complicated derivative-based, leverage-based strategies. So, that's something to be determined, right? How this all plays out. But I think it's certainly, and I was at the Bitcoin conference a couple of weeks ago, and outside of maybe stablecoins, I think the treasuries was the dominant theme, right? Everyone talking about the companies getting exposure. And so I think it's just going to be a matter of how these companies actually do it. And people are going to have to do their due diligence on investing in these stocks and understanding why this company has a, quote unquote, Bitcoin strategy.
Or just buy Bitcoin.
Or just buy Bitcoin, which is save yourself the hassle.
You don't need to be an equity analyst.
There you go.
We have better money. Just buy Bitcoin.
That's a great point.
Some people are scared to buy Bitcoin, though, and I'll tell you why. I'm smiling, but it's actually not. It's a more serious topic. But some people are scared to buy Bitcoin because, pulling up another tweet from Eric here, he mentions he read a piece about a whole family that has to go off the grid about their crypto and Bitcoin exposure. And he says, should not have to watch your back just because you made a smart investment. I wonder if these highly publicized cases will drive more use to ETFs versus self-custody. I mean, this is so Brian, you could just buy Bitcoin, but some people are scared to do it because it's like you could pull up this chart here as well from Alex Thorne, which is what
can you break down what's happening? Yeah, break down what's happening in the chart just for anybody that's not watching.
Yeah, and so this is a chart here from Alex Thorne at Galaxy, who we had on the podcast last week, and he says 2025 is on track to be the most dangerous year ever for crypto owners. More than 25 documented physical attacks against crypto owners this year, and the year isn't even halfway done. And mind you as well, this stat is like criminally underreported as well. There's a lot of things that are just never reported. And so the chart he has is just breaking down by country and also by year. It's a bar chart by year and then different colors for different countries where these incidents are occurring. And to tie it all back, it does actually, like these statistics ultimately do drive more demand to financial products like Bitcoin treasury companies or ETFs because people don't want to have to die for a trade. I think Michael said that before on the show. And then it ultimately ties back to what we do here at OnRamp. But I'm curious, like before going on my own tangent, if any of you guys have an initial reaction to this data.
I mean, the one thing I want to call out, somebody should, if you're listening, pull it up because if you look at the trend, it basically directly is correlated to the price of Bitcoin. So you can see it in 14 lower, and then you see the run up in 17 and then 18, and then it drops down during the bear. And then similarly, you can kind of see it in the run up of 21, and then it kind of like dissipates into the bear, and then it picks back up in 24, and then 25 is almost, close to the 24 high and a little bit less than the 21 high, but basically saying we're going to be much higher. And this is something we've been talking about behind the scenes and naturally been more louder about it because it makes complete sense as the price appreciates. If people are holding this stuff on their person, they're naturally exposed. And that's one of the big things we talk with clients about. It's like, we can talk about differentiation on all these different aspects of custody and financial services, but we're the only people really have been saying this for a while and have a viable alternative if you're going to get spot exposure, reduce counterparty risk while also reducing your family from being put at risk. And everyone else will position in a different way of do X, Y, or Z, and they're ultimately putting their clients at risk. And eventually their clients are going to wake up when something bad happens down the street, because I hope it doesn't happen to them, and then say, well, why didn't you tell me this? And then that's when like people are just going to flee to better products. So it's really unfortunate, and it's really unfortunate that like people don't talk or have the foresight, because I think a lot of people know this, but they don't have a solution, so they rather talk the book of like their existing product. It's the rational thing that was always going to happen, because this is why gold was sitting at banks. This is why custodians and banks have existed for thousands of years, is because ultimately, if you hold all your wealth on your person, bad things happen because bad people exist and they want it.
Yeah, I think I would just say, like, I think it's great that you guys talk about this a lot, because I think it's a hugely important part of this investing in this asset class to kind of understand what it is, how it's different. And I think, there's a lot of folks out there that I think, think of self-sovereignty as being like the most important thing. And it obviously is incredibly important. However, like you also have to kind of think about who you are, like individually as a person. Like, are you a technical person that can manage all this stuff by yourself? Are you someone that wants to, secure your physical home with fences and security systems, right? And so I think a lot of times like what gets lost in like the debate, particularly among kind of like the Bitcoin community on Twitter, is that like that's the ideal outcome for everyone, and it's just not the case. The majority of people don't want to invest in something if they have to somehow become technical experts in managing it, if they have to now figure out a way to defend their home from potential attacks and all of this stuff, which is why I think it's so important that you guys are have the product that you do, but also that you're talking about this stuff, because it's kind of like the family's dirty secret that no one wants to really talk about, because I think it's like an uncomfortable conversation, but it's so important. And I think the less we talk about it, the more risk there is of it happening to people.
Yeah, I mean, I totally agree. And it's not even about the physical risks only. I mean, these are obviously ever more present and unfortunately are only going to grow over time, because to Michael's point, if you look at the bar chart, it's correlated with the price of Bitcoin, and it makes sense, right? Because the price appreciates, people are securing more amount of wealth in their home or nearby, and then there's also more awareness around the asset class as well. And so you can imagine how many people still don't even really understand or know anything about Bitcoin and how it's secured in 2025, and this is already a problem. Well, what does that look like in 2030 when Bitcoin is a half a million, a million or more? Maybe I'm being bearish, and people are still using the same solutions to secure their asset. I mean, it's so there's obviously a huge problem with that. And then the digital side of it as well is becoming even more sophisticated too. People are getting duped by social engineering attacks to give up access to an account or give up access to a wallet or seed phrase. So there's really not many viable solutions in the market. And of course, we're talking our book, but it's also because it's true. I mean, I use OnRamp and the team uses OnRamp for our own Bitcoin because it protects against these threats that are going to become more and more present. And so this is a serious conversation that people need to just think through for their business, for their family, because unfortunately it's just a one-way street. I mean, it's great that Bitcoin appreciates over time, but then there's also just need to be real about, okay, well, how do I actually secure this for the long term?
Yeah, and I'd like to try to look at it all objectively in the sense of pretend on-ramp doesn't exist. It's really about like I just think of it as a broken side of market structure that's possible because when you look at across asset classes, people don't generally. Of course, there's always edge cases because there's always desperate people and there's always things that happen bad in the world. But you don't see this level of occurrence where people are robbed for their equity or bond portfolio because you think about all the controls and things in place. But in Bitcoin and digital assets. And the problem is like most bad actors in the physical world don't even know about Bitcoin yet, or that it's sitting on these devices in people's homes and all of the things. So that naturally is going to converge. And somebody can make the case, well, if we went into like a utopia and everyone had money and we're fine and the world's in a good place, but the reality is the world, we're long volatility. I think we'd agree, and we're going to be long kind of disruption just because of when you're changing a monetary order and you have inflation that's running rampant, you're going to have people that are not only desperate but feel like maybe they didn't get their fair shake, and a lot of people are going to be exposed. And so the alternative shouldn't be an ETF or a public treasury company because you're still having a bunch of risk. If that's your trade-off, that's fair for now if you're going to hold a hardware device. But that's where products and services, as the market grows, starts to grow around it. That gives you the natural exposure you would want without all of the counterparty risk of somebody being robbing you. So I think it's just a logical progression. This is really the key thing I've always keyed in on here is that this is how early we are. We hadn't figured out custody. Like this is how early, like maybe we're pre, 1995 to 2000 in the internet bubble where we're just trying to figure out like these primitives and how do you make them kind of dynamic and all the things related. But we haven't even got to that 2000 crescendo. And I think that's what's going to happen with these pubcos is eventually like we're going to have this blow off top and then kind of go into a like deeper bear that we went into from 2000 to 2005, eight, once, iPhone and things like that, Uber, Airbnb came about.
You didn't hear Michael Saylor said there's no more crypto winners, Michael. No more winners.
I think it's all relative is the big problem, right? Because we could go to a million over and then drop to 200K and people will just be like, oh, this thing was always a grift and a Ponzi and they'll
Right.
associate it with
100%.
Bitcoin when it was like people, running up shell companies.
Yeah.
That's the funniest part about the shell company stuff is like this is a product of how crazy the world is and generally, when you have money dislocated from real value is that it is turned around as a positive that you don't have any economic advantage outside of being an acquisition vehicle, right? Like Jerry, you keyed in on it's like you got to have some productive utility if you're going to use debt and leverage, not the underlying, because that's the equivalent of like somebody taking out a credit card and say they're just going to keep buying more credit cards to buy more Bitcoin and not have a plan if it delevers. Like that's effectively, or somebody calls it capital.
100%. Yeah.
Well, we're coming up on time here. Any final thoughts? Anything we didn't cover that we want to get into real quick, or did we do a good job this week? Also, if we did a good job this week, please let us know in the comments section, or tell us what we didn't do, and we'll maybe try to improve.
Sound off in the comments. Like and subscribe.
All right, I'm not hearing anything. So, Jerry, I want to thank you for coming on the show today. If people want to get in touch with you to discuss, anything we chatted about, where should they find you?
Yeah. So Twitter, OsheaGT is my handle. Hashdex, you can find our research and ways to contact me there as well. But really appreciate you guys having me on. I think you all know I'm a big consumer of your content, so appreciate having the opportunity to speak with you.
Easter egg, if you made it this far, we've talked about this a long time about the Last Trade Dinner series. And I know you guys are going to be in DC at the Bitcoin Policy Institute. Maybe that's when it gets kicked off. So if anybody wants to attend, they should shoot us an email. Yeah, reach out. Let us know why you'd be a good guest, and we'll set up maybe. I got to talk to Jackson and Brian first, but I would imagine Jared would enjoy seeing everyone in person. But yeah,
Yeah.
At the very least,
BPI
the three
Last
of
Trade
us will
Dinner
get dinner.
Series. Yeah,
I love it. Well, Jerry, thank you. Really appreciate the time.
Thanks,
and
Jerry.
good to connect.
thanks, Jerry.
Thanks, guys. Take care.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.